What's up, guys, and welcome to another beautiful trading week, and welcome to episode 3 of our TTP series. So what's the meaning of TTP? TTP just stands for Trading Till Payout. So we're going to be trading on this series until we get a payout, and we're going to document everything, the good, the bad, and the ugly, both winners and losers when it comes to trading. And if we eventually get to pay out, you guys are still going to see everything. And if we lost the account at a point in time, you guys are still going to see everything. We are accepting the reality when it comes to trading. You guys are going to still take this opportunity to understand the whole psychology that goes into being a profitable Forex trader. And for episode 3, we are starting with some bad news, in the sense that we were hit with slippage of the highest over the weekend. And I'm going to be explaining with you guys. Remember, I said I was going to be documenting all the trade, meaning I'm not going to place even a buy or sell on my side without documenting it or without you guys seeing, or I'm also going to show you guys all the results. If you guys can remember, last week we took a total of 3 trades: Great Britain Pound CHF, AD/NZD, and CAD JPY. By the close of the market, we already hit stop loss on one, which was Great Britain Pound CHF. Now, I had the option at that point in time to close all the trades before moving to the weekend, or to leave them. When you're leaving them, it's 50-50, because you don't know what is going to happen over the weekend. You don't know what fundamental is going to happen over the weekend, which is going to affect your trades at the open of the market. So by the I left the trades, I made a decision to say, okay, I'm going to leave them over the weekend. And by the open of the market, there was slippage of the highest, and I hit both stop losses on all the trades that were left over the weekend, and they were all in profit. I was up with almost about $1,000 in profit by the time I was closing on Friday, and by the time I opened on Sunday, I was down with almost about $4,000 in losses because of slippage. This is going to happen. There's nothing you can do. It's not a broker's problem. It's not a pro firm's problem. It's just volatility at that point in time. And that's what happened at the open of the market. So in some cases, like I said, it's 50-50. Just imagine I was on a buy. Look at this trade right here. I was on a buy, and it opens right down there. And I was already in a loss of 3,000 something. All right, so just imagine if I was on a sell and it opens right down there. I would have still been in profit of 3,000 something. So that's what I'm saying, it's 50-50. But I would always advise, if you're not too sure of what's going to happen over the market, just close all your trade. So to an extent, I'm happy because this is happening, and you guys can be able to see. It's not just green every day. It's not just rosy every day. Some days you're going to end up hitting your daily target like this. I didn't hit my daily target because I ended on 4.5%, which is very, very good. I'll come back tomorrow and we'll be able to continue. So I really like this to happen. It shouldn't just be winning all the time. It shouldn't just be green all the time. You guys should be able to see days like this, and it is now our ability to recover from this drawdown that will show you, that will differentiate us between losers, that will differentiate profitable Forex traders from professional, right? You can be professional Forex trader, I don't care, but now our ability to recover from this drawdown is what is going to distinguish the profitable Forex traders from the noise makers on the internet. So we are standing down on $94,200, and I can assure you, I'm still very, very positive we're going to be able to recover this account and possibly pass phase 1, possibly pass phase 2, and get to a payout. And it's just going to take us a longer period of time, because what used to happen is now traders will get to this point, and then they start revenge trading. They start getting angry because now they are down by almost about 5% of the account. Now they start revenge trading. They throw all their rules over the window. That's where they blow our account. The reality is now, if we were going to take a week to pass phase 1, it's going to take us maybe 2 weeks, maybe 3 weeks. It's going to take us a longer period of time, but it's not how fast we pass the account, but how sure we are able to follow our rules. So just to see those trades again, this was CAD JPY, this was AD/NZD. You can see where the market opens right down here, and we hit our stop loss without the price even getting there. Look at this screenshot. We hit our stop loss just based, slippage was about 20 pips. That means that big distance, just it hit our stop loss without even us getting there. We were in profit by almost about $1,600 on this trade, and boom, hit, stop loss hit, was just called slippage. And then let's go to CAD JPY. You guys are going to see the same thing. Where's CAD JPY? CAD JPY is obviously going to be here. So on CAD JPY, look at what happened. We closed again on Friday right here. See where the market opened on Sunday. Right down here, hitting our stop loss again, and we lost almost about $3,000 on the trade. With slippage on time, it doesn't respect your stop loss. So because someone will ask, oh, we're risking 1% on this trade, how come we lost $3,000? That's called slippage. With slippage, you can lose more than what you were even risking on that particular trade because your stop loss is going to be skipped. Have you ever seen a situation where your stop loss is skipped? Or the same way your take profit can be seen. You can be targeting $2,000 and before you open your chart sometimes there's slippage and you're standing on plus $5,000. It happens in both ways. Alright, but it's just rather unfortunate that it happens now against us. But yes, that was our CAD JPY trade and we lost almost about $3,000 on that one. And as we said, we are standing on now on $94,200. So we didn't just hit 3 stop losses on all the first 3 trades we've taken, but we also have slippage that has taken more than what we were risking on that particular trade. Because look at even AD, NZD, instead of $1,000 we were risking, we end up losing $1,300. CAD JPY, instead of $1,000 we were risking, we end up losing $3,000. So that slippage, you need to always accommodate this in your trading if you want to be a profitable Forex trader. So now on our episode, what's the way going forward? I'm not trading the entire Monday. Today's Monday, and we are not opening any trade on this account because number one, we need to respect our daily drawdown. We are not supposed to risk more than 5% of our account in a day. So if I can go now directly, let's just go to okay, we're just gonna blur this. Let's just go to FundedNext. If I can go to FundedNext, you can see this is we are standing on $94,200 and permitted loss for today is just $300, meaning this is how much you can lose for today. It's not even up to 1%. All right. So we need to be able to preserve our account. If you open a trade and lost just 0.4%, you're going to lose that entire account. So it's better we come back tomorrow so that we'll still be having our 5% daily drawdown, and we're hopefully going to be able to recover from there. So we're going to leave it as it is. We're not taking any trade today, minimum trading day. We just traded this account for one day, and it is what it is. We need to accept the reality of trading. So that's what I'm saying. We're not trading, we're not taking any trade on this account today. Tomorrow, we're going to come back again and we'll be able to see what trades we can take. We did our analysis last week, and most of the analysis we made, the market is just happening the way we predicted. Remember, we're waiting for the look. Waiting for pullback to Phipps level. It did pull back to Phipps level. We're supposed to enter on the buy here. I mean, this is what with that money we have already been printing. The same thing with Euro USD. Let's see what we said on Euro USD. Waiting to pull back to Phipps level. It did pull back to Phipps level. This is money we have been printing. So I don't want to regret. Don't trade based on FOMO, the fear of missing out. So, oh, since I'm not trading on Monday, I'm going to be trading on my other account, just not this series, because this series is dedicated for this account alone. Until we get the account, we get a payout on the account where we're going to get another one, or until we lost the account. If we lost the account, we're going to buy another one to continue our series until TTP, until we get a payout. Trading Till Payout. That is it. Trading Till Payout. This is going to be one of the most dedicated series you ever see when it comes to Forex trading. So tomorrow, I already have everything plotted in my chart. We'll just come back here again, just go through our chart, see the trades we can take, see which one we can ignore. And again, we're going to be sticking to our maximum of 4 trades per day. Maximum, meaning even if we come here and we see 10 setups, we're only going to select the best 4. If we come here and we see 6 setups, we're only going to take a maximum of 4 trades per day. And hopefully, our fingers are crossed, we're hoping to be able to recover from that drawdown. And it's our ability to recover from that drawdown that is going to prove to you guys the difference between the profitable Forex traders and the noise makers out there. So that's what it is, guys. That's what it is for this particular episode. We are not trading today. Unfortunately, we are not taking any trade. This is actually the first episode. You guys will watch me and then we didn't take any trade, but it is what it. Not taking a trade is just another trade. Not having a setup is just another setup. Not having a trade running is just another trade running in Forex trading, if you don't understand. So you don't think maybe the more trades you take, the more money you're going to be making. Since I'm not going to be taking trades today, I'm not going to, no, not taking a trade is just another trade in Forex trading. We're going to come back tomorrow with a clear mind. Our drawdown is going to be resetted and we're going to start trading at that particular point in time. That's what they call profitable Forex trading. That's what goes in your mind as a profitable Forex trader, and that's what also goes in your mind when you are having losing days, because not every day is going to be a winner. Not every day or not every account is going to be a success. Not every trade is going to be a success. But this is the mentality that goes into trying to also manage and stay intact and recover from those particular drawdowns. So let me know your thoughts, what you've learned from this particular episode on the video description. And trust me, I do reply to all the comments on this particular series. Share this with someone. Click the thumb up on the video if you like this particular series so far. Also check the playlist below to watch all the previous videos we've had on this particular episode. Join my free Telegram where I'm going to be updating you guys as we go as well with this particular episode. Also join me on my Instagram community. Join me on Godlove University because I'm also going to be very, very active in Godlove University where I'm going to be teaching you A to Z on how to trade Forex. So check the Godlove University mentorship link on the video description, and you can also use my recommended brokers, recommended pro firms that are going to be able to pay you. Also check all the links on the video description, and I'll see you guys. Click here. Click here to watch episode 2, the previous episode if you didn't watch. Click here to watch the whole playlist of this particular series. If you didn't subscribe to the channel, click here, and I'll see you guys on these other videos. Peace.